My name is Jake, welcome to the channel. In today's video, I want to talk about the power of dividends. I was watching Josh Brown talk about the power of dividends on his YouTube channel. If you're familiar with him, he has a YouTube channel called The Compound where they talk about investing, personal finance, and it's actually really entertaining, a lot of the stuff that they talk about. But one of my favorite shows that I watch every single Tuesday from them is called What Are Your Thoughts? And they talk about different investing topics. And this week they talked about the power of dividends. And I thought it was a really interesting show where they talked about, the case for why would you invest in a dividend and what is, kind of the use case or the power behind dividends. And what really caught my eye is, these guys, they don't talk about investing into dividends on a regular basis. And so whenever I hear them talk about dividend investing, I always get really excited because spoiler, I talk about dividends on my channel. I love investing into dividend stocks and ETFs, and it's just really an interest of mine. So the first part of the video, I want to talk about, kind of respond and react to what they were talking about in their, in this video, as well as towards the end of the video, I want to talk about why I personally really like investing into dividend stocks and the reason why I got into investing into dividend stocks. So that's what I'm going to talk about in today's video. But first, if you're new to the channel, once again, my name is Jake. I invest in M1 Finance and I am looking to build a dividend growth portfolio that is going to pay for my living expenses. My wife and I were both down in Austin, Texas. We have a little baby boy. His name is Lucas. And we are just normal people, right? And we invest into the stock market on a regular basis and we try to keep our expenses low because our goal is we don't want to rely on our active income from our day job for the rest of our lives. Now, not everybody has the same opinion when it comes to dividend investing, especially when you go online, you look on Reddit, you watch different YouTube videos. Some people are very pro dividend investing. Some people are very against dividend investing. And it's just so interesting that there's usually not a common ground. Most people, they're not kind of on the fence. We're like, yeah, it doesn't really matter. What I've noticed, most people who actively talk about dividend investing, they either love it and are complete advocates for it, or they absolutely hate it and they bash it, saying many different things and different reasons of why it doesn't work. And there's kind of reasons for both on both sides. But yeah, it can get a little bit frustrating, when you have two different people talking about the same topic and having completely different opinions on the topic, and it can kind of look a little like this.
Alliteration aside, I think I'll take my chances in the tournament.
Yeah, you will take your chances.
I know. I just said that.
I know you just said that.
Okay, I'm not sure where you're going with this.
Well, I'm not sure where you're going with this.
That's what I just said.
Well, that's what I'm saying to you.
All right?
Touche.
Oh my gosh, it's so true. It's so true. All right, cool. Anyways, so what I want to do is this entire video that they made here is just about an hour long. And the clip where they talk about the power of dividends is about 7 minutes. And so what I did was I edited out the parts that I found most interesting, and it's about 3 minutes long. And so I want to play that edited clip that I made, and I'm going to share a link in the description below to the entire episode. So if you want to go and you want to watch the entire thing, you can do that. But I want to first play this clip here, and then I want to respond to it and kind of add some context and some of my opinions to what they're saying. So with that, let's hear what Josh Brown and Michael Batnick have to say about the power of dividends.
While dividends might not, while the strategy goes in and out of favor, there is something very powerful about companies that can raise their dividends year after year after year. Sherwin-Williams is, of course, the paint company. That's 43 consecutive years. What dividends can do psychologically should not be understated. Are they the most efficient investment in terms of, yes, the company gets taxed and then you get taxed? All right, fine. Be that as it may. Be that as it may. In an economic downturn, when asset prices are turning down, there is a psychological component that should not be discounted, that that Sherwin-Williams is going to pay you a dividend, considering that they've done it for 43 consecutive years. I'm sorry. They've raised their dividend for 43 consecutive years.
Not just paid, raised more every year.
Realty income It shows that dividends matter to long-term investment returns. Of course, we know this. It's just really mind-boggling when you look at this. On top is the S&P 500 with and without dividends. And on the bottom is realty income from 1994 with and without dividends. Those are gigantic gaps. So I think that there's a lot to be said about dividends as an investing strategy.
I think they kind of are getting rediscovered right now.
Absolutely.
Dividend stocks as a strategy, as a style rather, were down like that, not asset class, but like, you know how you break the market's returns down into different strategies? The dividend focused strategy, which I don't think specifically is dividend growth. I think it's more just like screening for companies with dividends, was only down 7% last year.
Dividend growth is a subsector, but you're right. It is definitely back in vogue as the investor class shifts from growth to value.
I like reinvesting dividends, and I've always been somebody that likes to be able to measure the degree of success that I'm having in an investment, and you don't get that from the stock price every year. Because even if it wasn't a good quarter or a good 6 months or whatever for stocks, looking at the accumulation of dividends that you've been paid is dope.
Yeah.
Like, I don't think anybody would argue with that.
Now there are obviously a subset of quant nerds that would say that dividend is value and drag and it's a suboptimal. Fine, forget all that. On a human basis, it's good stuff.
It's right. It's affirming. It's like an ongoing update that you're getting, showing you that there's some progress being made besides the price of the investments themselves. Like, just like something is happening here. I agree with you. It's
and last thing,
underemphasized.
If the company's raised its dividends for 43 consecutive years, guess what's not happening? It's not going down 95%.
I don't think so. Actually, it'd be interesting, like how many dividend aristocrats that are raising their dividends every year for 25 years have like become horrible stocks. I'm sure they exist.
Oh, of course. I really hope that Lehman was not a dividend aristocrat.
So there's a couple things that really stand out when watching this video and listening to them talk about it. But the first thing that I think is really the most important thing is that you can't underestimate the psychological benefit that comes with investing into dividend stocks. The psychological benefit that comes with investing into dividend growth stocks, companies, businesses that have a long-standing or track record of dividend growth, that emotional benefit is usually what most dividend haters, they can't wrap their heads around it. They just look at the numbers and they don't really discount the benefit of the psychological or the emotional benefit that dividends provide, especially in a down market. In a bull market, when things are always green, everything's always going up, everyone can make the case, okay, go invest into every speculative growth stock there is. But when reality sets in and when, things are not so great, the benefit of having that continuous dividend income in your portfolio can have a huge impact. It is really encouraging to see that your dividends are growing and increasing every single month, every single quarter, and you see that, and you're tracking that progress. And that's the key thing that I like about what Josh Brown is saying is, in a bear market, when you're just looking at the share price and you're seeing your stock value go down and down, you can't really underestimate the value of counting those dividends in dollars that are coming in on a monthly and quarterly basis. You just can't. Another thing that I want to mention from the clip is, the impact or the power that dividends have when you're investing in a down market, in a bear market. When you have these unprofitable growth stocks, there's really no bottom. There's no floor because there's nothing to back it up. There's no cash flows to back it up if these businesses are unprofitable. With dividend stocks, it's an easier way to find the bottom because the businesses are profitable. And it really comes down to the question, okay, well, what price is Wall Street or investors going to pay for those cash flows? But when the cash flows don't exist, there's really no bottom in a bear market. And that's what we're experiencing here, in 2022 and here in 2023. But the example that they shared at the beginning of the clip that I didn't show was, unprofitable growth stocks like Carvana, which are down 95% over the last year. Even if you expand this over the last 5 years, you can see that investing into growth stocks is a wild ride. And that's where the emotional piece comes in. Right? Now, if you're investing in August of 2021, you're feeling like a genius, that you know better than everybody else. But when the coin flips and things reverse, you're feeling like you're rethinking all of your life choices. Okay, so this is the key thing here, is the emotional impact that investing has on individuals, that you can't underestimate the psychological benefit of investing into dividend growth stocks that have steady, consistent cash flows compared to speculative or, just speculative growth stocks. Let me show another example with Waste Management and Spotify. When looking over the last 5 years, you can see in orange that Spotify has these violent upswings to the upside and these violent swings to the downside. And that's what you get when you invest into growth stocks. Growth stocks are very, it's an emotional roller coaster, whereas when you're investing into a business that has cash flow and is profitable like Waste Management, it's a little bit of a slower, steady growth, but growth nonetheless, and you don't have those violent up and down swings. And that, you can't underestimate the emotional impact that has on an investor. Let me show this in another way here in Seeking Alpha with the total return. So right now, this is over the last 5 years, what we were just looking at. But if you consider with the dividend reinvested, it's even more evident that, dividends do matter, and businesses that pay a dividend in many cases, not in all cases, because not all dividend stocks are created equal. Just focusing on dividend aristocrats, those companies that have increased their dividends for the last 25 years, this is really what I'm looking at, this steady growth. Now, I do want to make a point here that, not all growth stocks are created equal. Okay, so let's show, for example, Netflix, right? Netflix, if you look at Netflix, over the last 5 years, they are crushing Waste Management, right? And you look at the total, even with the total return, even with the upswings to the upside, to the downside, Netflix is still beating Waste Management. But the key thing with growth stocks, and this is what I wanted to kind of transition with into the the second part of the video, kind of sharing my experience. This is the key thing. When you look at Netflix, yeah, it looks great had you invested back in 2018. If you've been investing since 2018, yeah, you've outbeat or outpaced the market. You beat Waste Management, a dividend growth stock. But if you buy a stock at the wrong time, it can be detrimental and catastrophic to your returns. Imagine you bought Netflix back here in November of 2021, you would be down massively, right? And even more so if you lump sum invested into, a growth stock. Now, I want to make sure that I say this as well. You can have the same effect with dividend stocks. If you invest into a dividend stock that is greatly or vastly overvalued, think about Clorox during the peak of the pandemic craze. Everybody's buying toilet paper and hand sanitizer and all that stuff, right? You can buy dividend stocks at the wrong time as well. They can get overvalued. But what I'm saying is, as an investor, if you're just a pure growth investor, you have to time the market. You have to know when is the right time to buy and sell. And that can be incredibly difficult, if not impossible. And if you even go back even longer, right? If you're trying to time the market, buy it here, sell it here, buy it here, sell it here, it's near impossible. Okay. Now, if you take a long-term approach to growth investing, I think that could work very, very well, and arguably better than dividend investing. In fact, more than likely better than dividend investing. If you have a 10, 20-year time horizon, you're more likely to beat the market if you're focused on high-quality growth stocks or growth indices versus, investing into companies like Kimberly-Clark or Procter & Gamble. Okay, but the key thing here, when you're investing into growth stocks, you have to not only pick when is the right time to buy, but when is the right time to sell. And so you have to get it right twice. You have to buy right and you have to sell right. With dividend stocks, if you take a buy and hold approach, you just have to pick the right time to buy. And assuming you're like me and you can't time the market, you're most likely dollar cost averaging. And so you don't have to pick the right time to buy. You're always buying. And so you're going to get market average returns. Okay. And that's the key thing is, as a dividend investor, you don't have to pick the right time to buy and sell. You just have to pick what's right for you. Either buy at certain times and time the market that way, or dollar cost average, whichever is right for you. And then you throw in there, throw on top of that the emotional ramifications that come with that. It's really hard to quantify the emotional toll when it comes to dividend investing versus pure growth investing. Now, for the remainder of the video, I want to share a personal story of why I prefer dividend investing versus growth investing. And I want to share some real examples and real things that I actually experienced that I think many of you, especially if you're new to investing, I think a lot of you are this is going to resonate with you. A lot of you are going to be like, oh yeah, I think I've experienced that as well. Or like, I think a lot of you are going to relate to what I'm saying. Okay, so because it's kind of timely, especially if you're new to investing in the last couple of years, I really encourage you to think about not just what's happened these last couple of years, but I want you to think from, kind of inside the emotional toll that it had on you and how it impacted you. Okay, because our experiences, they impact us either consciously or subconsciously. And when reflecting over this last decade plus, I've thought about how I, as an investor, have kind of evolved and changed, and some of the anxiety that comes with investing. And I want to share a real story. So back in 2007, I was going to college and I started investing more seriously for the first time. I'd always been kind of interested in money and investing. I was always very frugal, but I started really doubling down and investing my hard-earned money. I was always excited about how I was going to be able to invest my next paycheck into the stock market. Okay. Because I thought that's the thing that I needed to do. And I didn't really fully understand necessarily what I was doing or who I was as an investor. How should I? I was in my early 20s, mid 20s, and I didn't really know necessarily what I was doing. Back in 2007, like many of you know, 2007, I started, I think, in November of 2007. The timing is pretty interesting there. November of 2007, and I started investing the entirety of 2008. And all of 2008, I remember every day was a red day. Every single day I lost money. And I just kept scratching my head like, what is going on? This is all rigged. What's happening? And I would look at my balance on my portfolio. I was paying $7 a trade. I bought like $50 and I had to pay $7 in commission fees. It's horrible, horrible time. But I remember the stress that I felt and the anxiety that I felt that watching my investments go down. And remember what I said earlier here in the video, that when you're a growth investor, when you're trying to buy low and sell high, you don't only have to pick the right time to sell, you have to pick the right time to buy. You have to get both of those right. And I didn't really discover dividend investing until many years later. Okay. And so investing was always more of a burden for me. It was like, man, I don't know if I'm buying the right time. And it was no fun because I was really trying to time the market. Okay. And I started off really investing back in 2007, 2008, before the bull market started. And here's the truth. I got so frustrated from investing in 2008, going into 2009, that I stopped investing. I stopped proactively, regularly investing after 2008 because I was so frustrated with it and I didn't stick with it. So from a very early age, I guess it's early, mid-early 20s, I started off on the wrong foot. Ever since then, when I started investing more about 7-8 years ago, I was just like, I had like PTSD. I don't want to do this again. I don't want to, invest in the stock market because, I can't time the market. And then it wasn't until, I was about 29 years old and I started watching videos on YouTube from different YouTubers like PPC Ian, from, other YouTubers, talking about financial independence, where I started learning about how there's a different way to invest than just buying low and selling high. And sure, dividend investing can be not the most tax efficient way. Sure, dividend investing can maybe sometimes lag the stock market, right? In 2021, dividend investors got smoked. But here in 2022, dividend investors did incredibly well relative to the market. You have to understand, especially if you're a new investor, that the market is going to do what it's going to do. The important thing for you, if you're trying to figure this out, is you don't have to necessarily play the game, the market game. You can dollar cost average into your portfolio on a regular basis, weekly or monthly. You can automate your investing. You don't have to pay commissions anymore. You don't put in $50 and you lose $7 because of trading fees. You can do all that today, and you have so much available to you. You don't have to time the market, and you can pick investments with low fees, and you can be different. You can have a dividend focused strategy. You can have a growth focused strategy, and you can do whatever is right for you. Whether somebody says that mathematically your idea is irrelevant or stupid, or if you know that it's right for you and you get benefit from it, go for it. That is the true story for me for how I started investing and the impact that it had on me versus today. When I first started learning about dividend investing, it changed everything for me. My anxiety levels when it came to investing, my PTSD when it came to, buying low and selling high, and it all went away when I understood the power of dividends.
Please subscribe, please subscribe.
Subscribe.
Please subscribe. Eh?
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.